Allow me to welcome everyone. Welcome to Izaka Square Tables. Izaka Square Tables are webinars organized by Izaka Netherlands chapter in collaboration with Nouria, the internal audit institute of the Netherlands. Today's Square Table is with the title Why Cyber Insurance is or is Not a Waste of Money. I'm going to be your host tonight. My name is Ramzi Masri with my co-host Khifu Borat. And before we start the today's webinar, which I think is going to be very, very interesting, we have just some announcements and some house rules to share with you. As you can see in the background, I'm still admitting people. We have around 184 today, so it's a lot of. Can you guys hear me? Please close your camera and turn. Please turn off your camera and mute your microphone at all times. Can you guys hear me? I'm not sure. Ivo, can you hear me? Okay, excellent. Because someone was saying, "Are you mute?" Everyone should be mute except at all times, except the speaker that we're gonna present to you in a few minutes, and the two hosts, me and Ivo Boryat. So, moving to our housekeeping rules. Practically, please mute your microphone and stop sharing your video camera as soon as you are entering the session and during the whole session. Make sure on the Microsoft Teams, the first name and last name is the same ones that you used during the CPEs, during the registration for your CPEs. Due to the ISACA global guidelines about the policies and also some technical limitations, we will only be providing the one CPE for tonight's webinar if you attend at least 50 minutes. This presentation is indeed being recorded and will be released on our YouTube channel afterwards, and the slides will be shared after the session. It might take us a bit of time to upload it and maybe do post editing, but it will be uploaded to the website afterwards. If you have any questions tonight, you have again a small reminder because a lot of people joined us a little bit later. A small reminder, we do have two hosts. Myself, my name is Ramzi Masri. I'm the chairman for the Izaka Square Tables committee and also board member of Izaka Netherlands chapter, and a member of the committee, Khifu Boryart. We will either take your question from the chat and present it ourselves, and also actually the speaker tonight was kind enough to want it to be more interactive. So if you send a question, you feel like you want to have it right away, please use the raise your hand button, and we will, as moderators, depending on the timing, also allow you to unmute and maybe ask your question yourself. Before we move to today's very interesting presentation and talk, we have some announcements from Izaka Global. Basically, Izaka Global is looking for beta testers for their newest certificate. This certificate is targeting to create a certificate for cybersecurity operation analysts. It's called CCOA, Certified Cybersecurity Operations Analyst. And the beta tester spots worldwide are only 200 spots. Nominations has started and will continue till mid-August. What you will get is, please mute your microphone and turn off your camera once you join the webinar and during all times, unless provided otherwise by the host and co-host. So again, Certified Cybersecurity Operations Analyst is practically a new beta certificate. We only have 200 spots worldwide, so if you're interested, please show your interest as quick as possible. The couple of requirements that are needed is that you will purchase the Q&A, which is I think around $294, and also that you will be able to sit and finish the exam by 30 September 2024. For more information, please reach out to me as an Izaka board member. I will be able to patch you through to Izaka Global. We also have a request. If you like what we're doing in Izaka Netherlands chapter and you like our events, whether webinars, roundtables, the the Security Congress, the Risk Congress, the nominations for the 2025 award cycle opened, and it will be open till 15th of August. The URL is on the screen. Please, if you see that we are doing a good job there, provide us with a nomination as a chapter. And of course, if you have some other leaders or even other chapters that you think are worth nominating, please go ahead and do that. One last reminder from ISACA Global is that the annual general membership meeting, this is not the ISACA Netherlands chapter meeting, or let's say annual member meeting. This is the global one. So the full 160,000 members is going to be 24th of July, 2024 at 8 a.m. CST. And that email is in your inbox since 21st of June, 2024. So if it wasn't clear and you would like to attend, please check your email and attend that event. A discussion about the financial statement, some concerns related to the board of directors of the global is going to be happening on that date. So it's important for all of us to attend. We do have some quick announcements from the Netherlands chapter. So as you all know, we usually used to take July and August as the summer vacation, and we don't have any meetings in them. This year we decided to try and do some events in July, but August is kind of sacred, if I can call it that way. It's the summer vacation. So enjoy your summer vacation. We still have one more last square table in July, 10th of July. It's called From Firefighters to Business Enablers, Embracing Zero Trust as a Strategy. It's a new look about Zero Trust and how people see it and how people perceive it and how to implement it in a more human way. After the summer, we have two events coming from you. One is a square table on 18th of September, and we'll talk about diversity in cybersecurity, basically the importance of diversity as well as what you gain out of diversity. And then there is the roundtable in Eindhoven, 25th of September, and that roundtable is going to be top 5 lessons learned from defending Microsoft 365. We also have upcoming 2 events. The risk event, and that's going to be 6th of November 2024 in Spant, the Congress Centrum for the city Bussum. This is our annual risk event that we have every year. This year the title is Purple Ocean, Inspiring Change and Creating Value. Some people know what is a Purple Ocean strategy, some don't. Please check out the difference between blue strategy and red strategy, and then you will get to see what is a purple ocean strategy. So the blue ocean strategy or red ocean strategy, and we are discussing purple ocean strategy. I would like to say this event is not to be missed. We will be discussing a lot in terms of regulation, new risks, emerging technologies, everything. So I think mark your calendar 6th of November and try to be there as much as you can. The other event that we are also doing and organizing along with our partners, Platform for Informatie Veiligen and Noria, the Security Congress 2024. It was stopped for a couple of years due to COVID and other, let's say, logistical issues, but it's 9th of October, and the title this year is Expect the Unexpected. I think most of us in the cybersecurity field, past the AI, we know that we need to expect the unexpected. So please also scan the QR code to access the URL for registration as well as the details. This event is not really in the same venue as the risk event. It's in I think, if I'm not mistaken, it's in Hilversum, but the details are all available on the URL. I'll be also sharing the URL later in the text chat. I've already taken a lot of your time, so I want to give you now our speaker, Jack Schouteren. So he's the cyber growth leader, Europe, and cyber practice leader for the Netherlands. He works for Marsh, and also this team is expert in risk management and tackling growing cybersecurity threats. So Jack, without further ado, please take over the, I'm going to also spotlight you, and me and Givo will disappear, and please take over the screen sharing.
Okay. Do you hear me well?
Yep. We just need you to maybe go into presentation mode,
if
you don't mind.
Will do. And this should work, right?
Yes, sir.
Okay, perfect. Well, first of all, thank you for inviting me. As Ramzi said, everybody, I would like to have an interactive discussion. So if you have any questions, just reach out and the moderators will stop me. What I would like to do is give you a glance of how I look at a cyber insurance, what works, what doesn't work, and does it provide value or not for companies. So let me start with the beginning. If this will work. Yeah, just to give you a glance, because in my discussions, I've been working in this field for more than 16 years. I often see that, especially the IT persons, the CISOs don't really understand the different roles that people have. Well, my role is a risk advisor. So my role is different than, for example, an insurer or a lawyer or a loss adjuster. And my role as a cyber risk advisor is to understand and make you understand the cyber context within a business perspective. So we don't look just at the security measurements, but we look at security measurements in a business perspective. That's what we call qualifying a risk. And then the second measure could be quantifying the risk. So you make up scenarios which could occur with the company, cyber incidents, and what will be the long and short and long-term effects on the company. Those are the scenarios that you make, and then you quantify those scenarios to quantify the financial impact of cyber exposures. And then the next step would be managing cyber risk, and that could be, having more awareness training. That could be having a better business continuity plan and an incident response plan. But also one of the manners you can manage your risk is transferring it to the insurance market. And that's what I've been doing now for the last 10 years, especially. Before that, I was more a consultant. Now I'm more looking at the insurance market and to get the best, let's say the best wording, especially, so best coverage for our clients against the best premiums. And I think it's important just to look at how we look at cyber, also with the, when we look at cyber risk management, and then we look at how the cyber insurance will work. So a cyber event can come, of course, from a malicious attack. It could be internal, could be external, and it could be accidental event. So it could be a human error or just a system failure. And important for a cyber insurance is that a system, the IT system, should be well written down. So it should also cover your in-house, but also your outsource service providers, for example. A lot of companies going to the cloud. So if something happened to the cloud, when the cloud provider goes down, you have a business interruption. So that should also be covered. So it's very broad how we look at this, at this risk. So we look at technology, including IT and OT and data. And we look at the impact, the operational impact. Everybody in this meeting will probably know the CIA. So we look at confidentiality, integrity issues, and availability issues. And then we look at the consequences. And then we look at a loss of turnover, additional cost, third-party liability. You could also look at fund embezzlement, which has been in the news quite a lot, also via II. And then it's notable that the cyber insurance only takes up for the loss of turnover, the additional cost, and third-party liability, and not for fund embezzlement. So fake presidency fraud is not covered by a cyber insurance, for example. So we use this slide just to show the difference between the different type of coverages. And it should also be noted that cyber insurance covers non-physical cyber, and it doesn't cover physical cyber. So if you have a malware in a plant that disrupts the system, the financial impact is covered. But if that system is broken, so the machines are broken, for example, that is not covered under a cyber insurance. That should be covered under a property insurance. The same goes for bodily injury. Let's say I had a case in the Middle East where the elevators were hacked, or the whole system in a shopping mall actually was hacked. If somebody would stand in that elevator, go down, and have bodily injury, that should not be covered under a cyber insurance. That would be covered under a casualty insurance. That should give you some background, and also some background on the history of cyber insurance. It actually started in the 1990s, so it's been around for quite a while, not as long, of course, as the other insurances, but it has been around for quite a while. And it actually started as a add-on on different types of insurances. So you have property insurance, which has been around for 400 years probably. And then we saw new risks coming from cyber, internet, evolving IT operations. And then the market thought, okay, we have to do something to close that gap, to fill that gap rather. And they came up with a cyber insurance. Well, in the beginning, it was mostly on liability coming from the US, where the legislation is a bit different, but also, of course, the manner of how they conduct things. So let's sue first and then talk, instead of the how we work in Europe. So it was firstly named as a cyber, as a data breach insurance instead of a cyber, which is more composes more elements. And then in Europe, we actually thought more as a broader coverage, also including first-party coverage, which I will dive in later on. Well, then of course we got the GDPR, which gave a raising awareness of the consequences of data breach, especially because then it became a C-suite level conversation. So a lot of people then bought a cyber insurance. Then COVID, then we saw a lot of incidents, of course, also giving rise to the awareness of maybe a cyber insurance could be something very important. And then Lloyd's, the association which provides details on the insurance market, Lloyd said, hey, we have now silent cyber. So in property insurance, there could be some coverage on cyber elements. And they said you may have to make it affirmative. So you have to make clear for every policy that you have if cyber is covered or not. And that brought in a more importance for standalone cyber coverages. They were already around, but that made it more easy to distinguish if I have coverage on the property insurance, which now 99% of the case it's not. So I should look for standalone coverage for cyber for cases that I want to cover. And then in 2022, we saw a big spike in ransomware attacks, forcing the cyber insurance market to harden. And that's why we landed in a hard market. So you saw the premiums rising quite a lot. You saw deductibles rising quite a lot. And then we thought, okay, is this market going to be sustainable or not? And you see the blue line, then it would be not. But actually, this is a picture of a year, 1 year and a half ago. Now we do see that the measures that the cyber insurance market has taken has really progressed. And now we see much more competition from insurers. So now actually the rates are going down already from a cyber insurance.
We got our first question. Yeah. Sorry, can I interrupt you? So
yeah.
What does the graph present? The insurance premium increase or number of insurance companies active on the market or something else?
It is actually giving the graph of in every insurance market, you have waves. So it's a hard market, a soft market, but this shows that in cyber, you see the wave. So it started in 2015 with a really soft market. So everybody could get, or everybody, especially the companies below 500 million revenue, could get easy cyber insurance. Not too many questions. Premiums were very low. Deductibles were low. Then in 2020, 21 and 22, then we saw the hose on ransomware claims. Media and the cyber insurance markets, they thought the big claims would happen with the big companies. So I'll not name that, like the multinationals. But actually, we saw that the ransomware attacks were also happening with the SME companies. And it was mostly business interruption, where the chunk of the money was. So then the market had to go up, go hard. So the premiums went increased very rapidly, sometimes 70%, 2 times in a row. Deductibles went up, and also the demands to get a cyber insurance went up. So that's what it represents. Good question. And now we see the wave, and this one thought, is it going up, up, up? And now we actually see the green one going, where the waves are less volatile, so less increasing. And we see now the premiums also decreasing quite a lot, especially for companies above 250 million. We see decrease in revenue 30% at a time, and also no lack in coverage anymore in our portfolio, at least. That's what we see. Is that clear?
Yep, I think so. I see. Okay. Yes, thank you.
Yep. Okay.
Yep, go ahead,
great,
please.
Great. And then this is just to give you the example that we think it's going to be a sustainable market, and we are not the only ones. A lot of reinsurance markets also think that it's going to be a sustainable market and it will grow. It's not by far as large, of course, as the property market, but we think it's going to be a stable market in the coming years. And I think it's good to just talk a little bit about, because we often get the question, oh, do I need to invest in a cyber insurance or do I need to invest in security measurement? And we say it's not or, but and. So we see the role of the CISO, so the people in this call, for the risk mitigation, so preventing something from happening, which is the biggest chunk, of course. That's your target, is reducing the frequency. And then the risk transfer, because you always have risk that will remain, because I don't think anybody in this call would say our company is 100% safe for any kind of cyber risks. So in that risk transfer, that is the owner should be finance or the risk manager. And the strange thing is that we often see, for example, that the budget for a cyber insurance goes from the IT budget. Well, we don't see that in any other line of business. For example, property would never ask operations to provide budget for a property insurance, for example. And the target of a cyber insurance is reducing the severity. So if you look at this, the frequency and probability, that's on cybersecurity. So preventing something from happening. We all know that you can't stop everything. And that's why you want to take the risk transfer to minimize the impact and severity. So very easily put, very simply put, to keep your business from not falling down, from not going bankrupt. And that's why you need to risk transfer. So you don't need a cyber insurance for a data breach because you lost a laptop or you send an email to the wrong person. That's not why you need a cyber insurance. That's more like a nuisance rather than business critical. You need a cyber insurance, at least in our view, for business critical things. Is that all clear, Ramsey? Any questions on this?
No, we don't. But if you go back a little bit, I want to ask maybe completely different point of view.
Okay, go ahead. Yeah.
Because I agree with you that at some point the high risk we just cannot just transfer it. It doesn't work that way because you don't lose the accountability. But you have here some kind of graph. I know it's not supposed to be like very accurate or something, but it just wants to show the trend that if it's really. And I'm trying to read it here this way. If you have like medium frequency and high impact, this is where you have up till, or let's say, up till high frequency and even low impact, you see we need to risk mitigate, and I get that because the frequency is high. And then you say once we reach, this is how I read it, maybe I'm reading it wrong. When you have like medium frequency and high impact, then still you need to mitigate it, to damp it down, and then starting from lower frequencies but high severities. So I kind of feel like the cyber insurance or the risk transfer, the message that you're saying is mainly for black swans and not really for the day-to-day. Is that the right message or wrong message?
Yeah, it's a very correct message. So what we do, and I did as a consultant, is we did scenario analysis, and mostly we came up with 20, 30 scenarios, and you put them in a risk heat map. You might have seen that. And exactly what you say, the things that happen a lot, try to mitigate it. Change your controls, change your policies, etc., etc. We almost every time we had 3 to 5 scenarios that were really business critical. And of course, all the time it was a ransomware attack in there, but it could be other things as well that could impact the business so severely that within couple of weeks you go bankrupt, for example, or it would have a long tail, and that's why you need to risk transfer.
I feel also that, I'm maybe deep diving into that diagram, but because I like it, to be honest. So I also feel like what you wanted to say with the last piece. So you made it like 3/3. First third is like you have to mitigate it as a CISO. That's not really for cyber insurance. And I have some questions there. I'm going to come back to it. And the one in the middle is like the black swan / not so black swanish, if I can use that term. And then you said, okay, there are some existent level threats that nobody would be insuring you. That's what I guess is the last part of the 3 pieces, because there is an area where it looks like cyber insurance cannot help you, which is the last part on the very far right. At least that's how it shows to me.
It's not
So that's what,
intended like this. It's more intended that the risk transfer and the severity can have a long tail. So
okay.
what we often see is that, and I'll dive into that later as well, when we see the layout or the diverse financial impact of a cyber claim, it often goes like this. So the first part is mostly business interruption, but then we see that getting the system back on track, so the integrity of the system, then has a very long tail. And that's what we often see. And that's actually what is trying to see here.
To see. Okay. I don't know if that's covered by the rest of the presentation, but I'm going to ask a question also up front, because I got a comment from one of our spectators on the side that you mentioned that CISOs have their own, let's say they need to know CIA. Of course, they need to know confidentiality and availability. I think what you meant is like CISOs have a role, risk insurance have a different role. And that leads me to a question about who actually in the organization should be the person responsible for saying, wait a second, we did our best into the cybersecurity field, and I don't think it makes sense we continue without a cyber insurance policy. Okay. Do you think it's enterprise risk management or it's IT risk management? Is it the CISO? Of course, CISO is also a point that needs to be discussed, because if it's C-level, then maybe yes. If he's not a C-level, then it's also debatable if he's a transformational CISO or technical CISO. I mean, it's a topic, but generically, who do you think should take the decision?
I would say that it would be the risk manager and or the CFO. Depends a little bit on the organization how they see, because the CFO mostly, what we see at least, is connected to the IT and has that helicopter view of the financial impact on short-term and long-term, the contracts, etc. So when we discuss this kind of things, we always say, please invite the responsible persons for IT, the CFO, and somebody, if there is somebody from risk management. And the strange thing, and for property, for example, and there's no discussion, do you need a property insurance from a company that's been around 400 years? It's always risk management. They all know, but here I get often the question, I'm going to ask my IT department, and I'm going to be black and white here because it makes it easier for the conversation. Often we see that the IT personnel don't have that helicopter view of short-term and long-term effects. So if we go into discussions with them, so what it will be the financial impact, and often they come up with only their IT system or forensics, but not the business interruption, for example. And that's the biggest chunk. So that's why we often feel that it should be risk management / the CFO to take that decision. And of course, the CISO is a very important gatekeeper, but I don't think it should be the decision maker.
I kind of agree with you that he shouldn't be decision maker because it's a bit more enterprise risk management. But he needs to be consulted, because also the IT people, as you said, they are just talking about their technical aspect. CISO should be more than this, of course, not should be, they are more than this. Yeah. So, the
CISO should have like the business impact view as well. And I do agree with you that they are a very important decision maker, especially in consulting which cyber insurance should take and what would be the wording. The CISO is vital. That is essential, and that's also one of the things that we see that's still lacking at the moment.
I don't want to take more of your presentation time.
Not from the CISO community, by the way.
That's good to hear.
Not from the CISO, from the internal communications. So I have some clients, I can be very honest with that. And then there's a new CISO. He's been working there for half a year. And then we have discussion on cyber. Said, I didn't know we have a cyber insurance. How's the incident response covered? And I'm like, okay, but the insurance and it covers cyber incident response should be implemented in your incident response.
Exactly.
So then there's a miscommunication internally.
So I think I have a takeaway, if you don't mind, from this, that we as a CISO community need to maybe educate our enterprise risk management functions as well as the CFOs, if we can reach them, that they need to involve us quite well in the
Yeah.
cyber insurance.
Yeah, for sure. Yeah.
Yep. Then I would leave you to continue. I took
Okay.
already like 10 minutes. Sorry for that.
No, good. We like to keep it interactive, right? So I'll just show you this, the cyber risk insurance coverage, because I do see quite a lot of miscommunication on this. Let me just throw this to the back. So cyber insurance has 3 pillars, which is very broad and strange actually when you compare to other types of insurance. So the triggers, of course, is the malicious attack like malware, hackers, DDoS, data privacy violation as well, and accidental events like human error, system outage, and also data breach. And it impacts the confidentiality, integrity, and availability. And then you in cyber insurance, you would normally have cyber liability covered. So, for example, you have a data breach. You get claims from client and suppliers, claims from other third parties, and you get legal advice and assistance that's covered. The biggest chunk in continental Europe is the first party losses, direct and indirect. It could be insurable fines from the GDPR or PCI DSS from the credit card associations. I always say if you want to take a cyber insurance for a GDPR fine, don't bother. It's not the biggest issue. And if you get a fine straight away, you might not be eligible for a cyber insurance. There are some gray areas, of course, but when the GDPR started, a lot of companies wanted the cyber insurance. We always said, well, let's first look at your real risk before we take out a cyber insurance. But it's also covered XPR, customer service, reputational protection. Very important, the reconstruction of data and systems and other costs caused by the event. Then, of course, ransomware, the money itself is covered if you need to, if we need it, always the insured will make that decision. And the negotiation costs are also covered. And then what I just mentioned, the business interruption, so the loss of gross profit, loss of hire, and extra expenses to prevent stagnation are also covered. Then we have the incident response, which also elaborated on a little bit before. So on every insurance, you have like a phone number that you can call, or an app. If there is, you as a CISO think something is wrong in the system, or you see actually something happening already, you can call that number. They will help you. So first it will be like a script. So you will be talking to them in English. They will ask you, who are you? What is your policy number? And what is the incident? And within an hour, you will call back in your local language. And so that would all be covered. So there are parties like Fox IT, Kivu, Nordwave, and legal assistants like Kennedy van der Laan, Norton Rose, CMS Law Firm. That kind of companies that will help you straight away. And that doesn't... there's no deductible in place there. And that's especially important for the smaller companies. So the insurers want you to be involved with the right experts straight away. So they don't want to have that threshold for a deductible. They want you to interact with the people straight away. So mostly that's covered for the first 50,000 euros without a deductible, or the first 48 or 72 hours, depending a little bit on the insurer. And then insurers are investing more in preventive measurements. So they give out, depending on the size of the premium, for free regular phishing simulation campaigns, YubiKeys, crisis simulation workshops, everything that can enhance your risk they want to invest in, depending, of course, as I said, on the premium.
So we do have a couple of questions before we move forward. Givo, go ahead. You had one of the questions.
Yes. We have one question in the chat. And he was asking, what are indirect losses?
So that could be, let me see, that you have to do, there's an incident, you have a business interruption, meaning direct loss, you can see directly what's happening. It could be that out of that effect, you're losing clients. So if you have a business interruption on the long term as well. But it could also be that to prevent the situation from getting worse, you have to buy monitoring services, for example, and that would also be covered.
Okay, thank you. No, I hope this answers your question.
Yeah, we have another couple of questions. I'm going to take them in I don't know why we have someone getting in and out now, but there is a question about up to what extent are the amounts insured. I think this is related to the underwriting process, right? That this is not a generic number, or maybe it is. You're the expert.
No. So strangely enough, I'm now working for a client that has 8 million revenue and they have 15 million limit. That's just for a contract. And I think the highest we have in Europe would be a limit of 350 million.
Yep. And also there is a question about the covering of the ransomware payout.
Yeah.
That's covered.
That's covered. Yeah.
That's covered.
And how it works, it will be, of course, you have that panel of the insurer, or you get your own vendors in place. And we always advise not to do the negotiation yourself. Let an expert do that. And then with the expert, I have a case at the moment where we try to prolong the negotiations to make sure that we have all the data that we need to minimize the business interruption. And then after that, we said, okay, we don't need to pay. Sometimes, it goes the other way and then you need to pay. But that's on the insured. They will pay. They will make the statement that there's a payment to be made. Then the negotiator, so the forensics party, they will do the negotiation again. They will pay the amount. The insured will pay a fee to that investigator, and that invoice can be reimbursed with the insurer. So that's the way it works. Yeah.
Okay.
Hope that clarifies.
And it clarifies a lot. Also, you gave an actual example that you were doing this with a client, and I get the fact that if the client has a way to recover from the incident without paying the ransomware, it makes sense not to pay, basically. We have a question, but for me, it's not very clear. So I'm going to ask Daniela. She's also, by the way, a member of our Square Tables committee. She had a question about the physical incidents, even due to cyber attacks, are not covered. So the question requires a bit of clarification. Daniela, would you like to unmute and ask your question, please?
Sure, thank you. Thank you, Ramzi. Good afternoon. My question is about the wording. You mentioned early on that physical incidents, even though they're caused by a cyber incident, are not covered by cyber insurance. That will depend on the wording, correctly. If it's excluded, or how explicit those exclusions are, because that's why we have the concept of selling cyber in the first place, right? Or are the insurance policies being standardized in such a way that there is no way that those physical damages can be claimed?
Okay, very good question. Thank you. So in a standard standalone cyber policy, a property insurance deriving from a cyber event will not be covered, because it was never the intention to cover that. At that time, as the cyber insurance market grow bigger, it was still covered by the property insurance market. But then Lloyd's came in and said, hey, you need to be affirmative if you're going to cover it or not. And then a lot of property carriers said, no, I don't want to cover this anymore, because I never intended to cover that. And there are carvebacks, etc., etc. And we're now seeing a prolonged or
just 1 second, check. There is someone who unmuted by mistake.
Yes.
So I'm gonna mute everyone. Sorry.
Okay.
Yep.
Am I still on, Ramzi?
Yes, and can you hear me? I think.
Okay. Yeah, what I was saying is that now we see more appetite, because we see, of course, the silent cyber topic is quite difficult. also for clients to understand what is covered, what's not covered. And now we see also in the cyber market that we are trying to get that property insurance in place. But to be frank, that's quite difficult. Also because the limits are so different. So I just mentioned the biggest tower we have in Europe is like 350 million limit. If you compare that to the property market, that goes into billions sometimes. So we don't have that amount of capacity in our market. And that's why we're always negotiating with the property brokers on this as well. I hope that clarifies a little bit. But it would be safe to say under a regular standalone policy on cyber, a property damage would never be covered. I think that's the best way to explain it, very black and white.
Yep, we do have a few
Thank you.
questions before we proceed.
Okay, go ahead.
So, and I see them very interesting before we go into the claims part. So, we have, how do your risk assessment and client acceptance policies and procedures look like? I think that's a good one,
Yeah.
because also, at least in my experience in my previous, one of my previous employers, we actually used cybersecurity insurance or cyber risk insurance as a driver for the whole enhancement of cybersecurity. So
Yeah.
I assume that came from exactly this, the risk assessment and that was done by the insurer or by the insurance broker.
Yeah. So mostly it's an application form that they use, but that evaluated quite quickly. So what I mentioned in like 2015 when I just started, I could go to a hospital, call the insurer market, say, hey, I've been to this in this hospital. These are the amount of records they have. Can I get a policy or a quote, let's say? And they asked very few questions. Then the host on ransomware claims came, and they really dove deep into the application forms, really asking quite deeply how many private service accounts you have. Do you have EDR, PAM, etc., etc. So it's quite a nuisance, I know, for a lot of CISOs or their teams to fill this in. And what we're doing now is, and the whole market's doing it, we have something called a cyber self-assessment, which is based on the NIST framework and ISO 27001. An extra question that the market asks, and that's about, we have now more than 10,000 clients in there. We distillated we looked at the response of the cyber insurance market. We distillated 12 key controls out of that. So there are 12 key controls that the insurance market finds most important. And that's where they really focus on. If you don't have those in place, it's very difficult to, or not that black and white, that if you don't have one of them, you can't get the whole policy in place. But it would be best to get that fixed in your application, that's a solid foundation to get the best premiums and especially the best wording in place. To be very frank, it also depends. So every insurer has its own model for that. So it depends. The general information would be segments, revenue, geographical scope, because US is a bigger risk than continental Europe with data breaches. The amount of data, do you have like health data, credit card data? So that's all generic. And then they look at your private data and on the controls. Does that answer the question?
I think so. I of course, we got a lot of follow-up questions on that one.
Oh, okay.
But we have two questions. I'll hand over to Clivo for them. And if possible, these 12 controls, I don't think you have them ready, or maybe they are in their slide.
I have them.
Then, if we can send them to the chat, or if you have them on one of the slides, it would be nice to highlight them.
Yeah, I have them in the appendix. So
Excellent. So Clivo, can you please go ahead and ask the two questions?
Sure, I can. We have a question from Rick. What will happen if the accountant in his management letter has mentioned bad authorization, example, lots of super users, and they got hacked? Will the company get some money from the insurer?
Let me see. So the accountant says something is wrong, and then they get hacked. No, there's no cause and effect there. So if I hear, can you repeat again? Sorry. This is quite...
What will happen if the accountant in his management letter has mentioned bad authorization, an example, lots of super users, and they got hacked? will the company get some money of the insurance or from the insurance?
So, okay, so the accountant is not in play here. So what will happen is you have the application form or our online tool where those questions are asked. And if you answer them truthfully and the risk is accepted and there's an incident, yes, then that's covered. But there's no role for the accountant here.
So can I intervene and make it a little bit clearer? It is a kind of self-attestation. So if the company self-attested that they had implemented the control and turned out during the investigation that control was not implemented, then the cyber risk insurance would say, sorry, it's not our fault, right? This is how I should interpret it?
Yeah, black and white, yes. But I have a claims example in here where it's not that black and white and there was coverage. But it's a very good point. Yeah.
Yep. And then maybe we should move to the next one, because since you have it in the claims that it will cover, then we and I'm also aware of the time we have around.
Yeah,
minutes,
just stop me if I'm or just charge me if I need to speed up things.
We have just one question before we run out, and I guess you covered it here. It's like about the difficulty of preventing fraud concerning ransom payouts, and what is keeping companies from ransoming their own company. I would love to do that if that's easy, but I don't think it is.
Yeah, but to be honest, we get that question also from the politics. You shouldn't cover ransomware because it will make it easier. People will not invest in cyber risk controls. But I have not seen any company that wants to pay ransom to anyone. Of course, there's the negotiation, so the amount must go to somewhere. And also, if you look at, it's not in the slide deck, by the way, but we have analyzed 100 claims where ransomware money was paid. And in that calculation, the ransom money itself was only 24% of the total loss. So the big chunk was again the business interruption and getting the system back, so the integrity part. Those were the biggest chunks. There was, I think, 50% of claims. So we hardly see, even, well, you know that better than me, but even if you pay the ransom, it's not like a silver bullet and everything starts running again. Getting the system back on track sometimes takes months. So the business options is quite difficult. So I wouldn't see anybody trying to hack themselves and then get payment out of it. So no, I don't think that's feasible. No.
Yep. Then let's continue. Go ahead, please.
Okay. Yeah, and I think this financial impact seen in cyber claims, this is only for continental Europe, I must say. So that's very important to note. So it's interesting because a lot of, especially then the CFOs or legal or the risk manager, they think, oh, it's all about liability. I'm scared of fines from GDPR or liability cases of data breach. We actually see that from the liability, the financial impact on cyber claims when it comes to liability is like 5 to 7%. The assistance and emergency measurements, so the legal assistance, the forensic assistance, this is 20 to 25%. And the financial direct loss or indirect loss, so the first party loss, amounts to 70%. So I think that's very good. And that's, Ramsey, going to your point, why CISO, who knows the business, the CFO, the risk manager, somebody for operations, someone for sales, they should really discuss the cyber risks among themselves to really dive into, what are the short and long-term effects on us? Because it's too easy to say, oh, we're going to get a fine from GDPR. That's not the biggest risk. Mostly the biggest risk is in the direct losses. Even with, we saw that with companies that are mostly driven only by data, but not manufacturing. Even there, we saw the financial loss was mostly in the first party losses. I'll dive into it a little bit faster. So this is just trends that we see in continental Europe as well. So 2021 was the biggest claims year. That was all due to the ransomware host. Now we see still, of course, the claims rising, but not as fast as before. And we see an increase in retention, so deductibles are higher. So the amount of notifications and claims also limited therefore, because if you have a very high deductible, you're not that prone to notify the insurer. But also we saw the security maturity increase significantly. So that's also very good. I think, Ramzi, you mentioned that as well. We have clients that say, I want the cyber insurance because that keeps us in the state of best practices, because they demand that from us as well.
If I can ask a quick one, and,
Yeah.
and just I need the one liner, not a big
Yeah.
discussion. Is it like, as I said, usually what I understood from at least the exercise or a couple of exercises I've been into, it's a kind of self-attestation, but there is no real audit from the cyber insurer to the companies. Is it going to be at some point an audit point, or no, they like to keep it that way?
Good point, because I forgot that in the previous question. The good thing at the moment is it's not just the application forms going back and forth. The insurance market has really invested in risk engineering. And risk engineering means somebody that has your level of technical knowledge, that can speak on the same frequency. They conduct a clarification. And they also provide you with things like measurements, things that you should look into. So that's very, very good, I think, at the moment, what's happening.
Yeah. Side one addition, because that was also asked part of the chat, and I was kind of keeping to the end, but since we opened the topic, suppliers and supply chain and third-party management, third-party risk management, sorry, is that also investigated? Like if I'm really good and doing well and I'm ISO certified, but my suppliers are not, would that push me towards the bad side of the cyber insurance?
It are a couple of questions. It's more like, do you have contracts with them? Do you audit them? That sort of thing. But they won't audit those companies, for example.
Okay.
So it's pretty slim still. Yeah.
Yep. Let's continue then.
And then the notifications. Financial institutions were always on top, because very easy. They were the most mature in identifying the risk, also from the legislation. So they invested at the first. They were the first movers to assess and to buy a cyber insurance. And now manufacturing is also really increased because of a lot of ransomware attacks. So they wanted to transfer the risk to a cyber insurance. And of course, if you buy more, there are more parties buying a cyber insurance, the chances that you get a claim on one of those segments is also increasing. What's worth noting here is communication, media, and technology. We've seen a definite increase there, and where we see the digital supply chain under attack, where criminals want to attack an outsourced service provider, for example, to get into that digital supply chain. So we see increasingly more claims there. And then reasons why organizations purchase cyber insurance. I took another report from this, because I don't want to be like presenting only preaching my own to the choir. So we took this from a big research that's done recently, and it's quite similar to what we are seeing. So driving it is general awareness of the business impact. It's part of the risk mitigation strategy, which I think is good. It enables us to work with clients, business partners who require it. It's something that we still see, what I just mentioned. The client that has 8 million revenue and needs 15 or now 17.5 million limit just to sign contracts. So it's a business enabler to keep pace with best practices, requested by the board for their D&O risk, or experience cyber attack or regulatory requirement. Well, I actually don't see that often, but it's a worldwide survey. But in Europe, I don't see the last one, to be honest.
Well, I guess maybe it's a question, side one, a quick one also. Do you think we should push our politicians to have a regulatory requirement for cyber insurance?
It was actually a question which was answered by the ministry a week ago. I don't know who filed the questions. It just stated it's civilians who asked the question. Or maybe it was you.
No, it wasn't me. Just okay. For the record, it wasn't me.
They said no, and I tend to agree with this because I think the most important factor why you should buy a cyber insurance is the risk-based approach. So you internally or with an consultant look at what are your risks. You identify them, so qualify your risks, make the scenarios, quantify them if needed be, take measurements, and then look, okay, what are the risks that are still there? despite all those controls that we've done, all the discussions, and then look, do we need to transfer this to our risk? I think that should be the reason. And I don't think, because otherwise it will be what you see now in contracts. I have clients that don't have ransomware coverage, for example. They only have the liability part because of contractual regulations, requirements, sorry. And I keep telling them that's not risk-based, because a ransomware attack will hit you. And guess what? They had a ransomware attack. No coverage.
Yeah, I can imagine. The main reason I asked for that is, for example, insurance company, they have what they call reinsurance companies. So like they insure the insurer. And the way I see it is, most of the companies, whatever vertical, banks, institutions, enterprises, smaller one, they will get hit by a cyber attack at some point. And that's why I'm thinking it makes sense to maybe legislation or not. That's why I asked that question, to be honest.
I think NIS2 and DORA will have effect as well, because there you see the liability of the board, and there was an article in the financial paper in Netherlands about NIS2 without even mentioning it, and within 2 days we had 50 questions from the board. Hey, what do we need to do? So that really helps as well.
Yep, excellent. Then I'm aware we have like 3-4 minutes, so I will keep my mouth shut a little bit. Please go ahead.
Yeah, okay. And any questions can come later. So I think the question was, is it worth it or not? And I actually said this, cyber insurance is not worth the money if you don't know why, how much you need, and what it covers. So from the same survey, we see them below. The questions were asked to almost 5,000 organizations, to the IT people. Do you know if it's covered or not? Well, this goes to our discussion before, Ramsey. If you don't know what it's covered, why would you pay something? So that's the onboarding that we really need to improve, which was discussed earlier. Explaining what the intent of a cyber insurance is, explaining what's not the intent, so what doesn't cover, and make a risk-based approach on the need of the insurance. So we actually covered this by the discussion that we had, probably. And then some real-life claims. I'll jump into that. This is one that's probably maybe well known still, so quite some years ago, but this is one really big one. Norsk Hydro had a ransomware attack. I don't know how it's filed now, but I know they had a good insurance in place, and at least they got 20 million out of that insurance. And here I have a smaller one, a car dealership received an email from a threat actor stating that a system of a vendor, here we go again, vendors, was exploited, and the threat actor had access to customer data of the insured. They had to pay a ransom for preventing them to release that data. And then the incident response of the panel came in place, engaged with legal counsel, forensics, credit monitoring, notification, etc., etc. They found indicators of compromise in the employee's email, and they requested loggings from the vendor. Didn't find any other unauthorized access. Therefore, the insured was advised against paying a ransom to the threat actor, and the policy paid 50,000 in cyber services. Another one, a little bit bigger event that we recently saw was a ransomware attack and logistical software, which was encrypted. Couldn't sell the products because it was down for 9 days. Of course, again, the threat actor asked for a ransom money to be paid. The insured did not respond, and no ransom was paid. So again, the legal advice, IT forensics, regulators in 4 countries were notified. There were formal claims from customers who claimed damages, and the costs endured here were the legal costs, the PR consulting, IT forensics, customer notification, and of course, the biggest chunk probably the business interruption. So there was in excess of 6 million. And there we have claims that didn't go that well. This still resonates, I know, in your community, and it's out there still. It's a long time ago where there was a big incident concerning the NotPetya incidents, where Mondelez company had a property insurance. That's vital. It's a property insurance, not a cyber insurance. And they said they had a big loss, over 100 million loss. And the property insurance didn't want to cover it because of clause on war clause that they had, but that war clause deviates from a cyber war clause. So in this case, they didn't want to pay. At the end, they settled it. But the strange thing is that it still goes around in the communities saying, hey, cyber insurance didn't pay that NotPetya claim. Actually, the NotPetya claims on the cyber insurance were all covered. As far as I know, this was a property insurance, and it, in all likelihood, never intended to cover losses from events like NotPetya, and that gave the whole discussion. And then I have another one where a claim example could be of interest to you that goes into the application form. Here we had a client with a lot of entities, and in the application form it states the insured is the entire organization applying for all coverage and all subsidiaries. So all the entities, you answer the questions for all entities. And they had a small entity where they stated, oh yeah, we have MFA in place for all entities. Actually, what happened, they didn't have MFA in place for that entity. They outsourced that to professional party. They didn't inform the client on this, that they didn't implement MFA. And what do you know, there was an incident arising out of that entity. Now that entity was very small. And at the end, the insurer took paid the whole amount. But they would need to assess what would have happened if the duty of disclosure, because that's where the client failed, had not been breached and our underwriters have received the correct information. So probably if that entity was much bigger and there was no MFA in place, they could have denied coverage or excluded that entity. At this time, the entity was so small that probably they would say, okay, it's fine, let's cover the whole holding structure. So this is something that's quite important, I think, also for you, and where you should engage in really reading the application forms or the cyber self-assessments really well and ask questions to your broker on this. So what am I signing up for, and to what extent am I signing up for? I think that's really important to take away from this one. And here are some things to handle, but I think I'm out of time, Ramsey.
No worries. I mean, we can
Okay.
extend for a couple of minutes. I do see a lot of people sit there. We cannot really pass the, let's say, 10 minutes after 8 because then it's too far. But
Okay.
thank you. It's very interesting. And I just want to say the last claim that you're talking about, this is the one when you said, even though they didn't do 100% a proper disclosure, or let's say not really disclosure, but self-attestation in the right format, they still got the claim because it looked like they were not doing it intentionally, basically. That's kind of what I understood. Okay.
Yeah. But at this moment, we see, and I didn't want to mention it here because I don't have that official number, but I thought we did a research that 95% of the cyber claims are all covered. Where it's not covered, it's mostly that the client comes up with, hey, I have property damages, which we explained is not covered under cyber insurance, and probably these kind of things. And here we were lucky, of course, we pushed for the client, but I'm quite certain if this loss would be millions, then we would have a really different discussion. So that's why I mentioned it here. This is quite important.
Okay. Yep. Then please go ahead.
And this will be shared, of course. I think it's important also to discuss this internally. When there's a claim, what do we do? You know, logging is so important. What do we do? What type of vendors do we engage with? Why do we engage with them? Why for this term? For example, I mentioned monitoring. We have seen cases where the vendor said, oh, you need to take out monitoring for at least 12 months. And the insurer was not engaged in it. And then the insurer said, okay, but why am I paying for 12 months? Because it should only be 3 months. So these are the things that your broker should help you with, but it's also good to have that conversation when you start looking for a cyber insurance. And especially the onboarding. And I can just go fast forward. These are the 12 controls that I mentioned, Ramsey. So they're on the slide deck.
Yep. I think this brings us to the end of the presentation, right?
Yeah.
Because we have a quick couple of questions, and then
Okay,
I would really like to thank you. If you can leave this for everyone, because I think a lot of people want to see it, until we answer these two questions. So we do have a question about basically, does tooling exist to do cybersecurity scenario analysis in-house? I think if I can twist that question a bit, what kind of tooling do you use to do the cybersecurity scenario analysis as a broker, basically?
Yeah, we use the cyber self-assessment. So that would be the online cyber self-assessment that we use. So based on NIST framework, ISO 27001 and questions. But that's desktop research. So we would look at your IT security policies. We would look at this HR policy, your annual report. So that's desktop. And what we then tend to do is just get people from different stakeholders with the company, mostly 8 to 10. So operations, sales, legal, CISO, CFO, etc., to tackle that the risk exposure from all angles. Because often we see that sometimes very small application can have a big effect in the long term. So that's why I don't really believe in tooling, automatic tooling, because we really need to dive deep into the knowledge of the people on board, because they know how the business will react. They will know what is really important. So that's how we do that, and then we come up with those scenarios, and then the quantification that is done by our econometrist. So we have what's it called, Blue Eye, which is just an application where we have all the data from our claims, but also data that we buy from vendors, and we make a Monte Carlo scenario analysis. So every incident will go in there 1,000 times, and then you see the expected, the worst case scenarios, and the chances of that.
Well,
So
I can tell you, like, I have many questions, but we're out of time, and people started to have to go. So I would love to thank you so much for tonight.
Thank you. Thanks for the introduction.
It was a pleasure having you there, and I hope we were not so tough with the discussion. And yeah, thank you so much for tonight. And ladies and gentlemen, have a great evening, and hope to see you after the summer. Sorry, there is one more square table. Please come with us 10th of July, if I'm not mistaken, and we'll see you soon. Thank you so much, and have a good evening. Thanks, Guibo, for co-hosting with me. Thanks, Jack, for staying with us till now.
Thank you. Thank you for the invitation. Thank you very much.
Thanks, Jack.
Bye-bye.